Okay, so we've got the 4-1 work together. Got 3 steps here. Preparing a chart of accounts. Our first step is we've got accounts, so we're going to identify all these accounts of what type of an account they are. So whether they're an asset or a liability, part of owner's equity, and whether it's a revenue account or an expense account. Then in part 2, we're going to arrange our accounts in order and number them. And then part 3, we're going to add a couple new accounts. So we can look at the instructions here. Isabel owns a service business called Seville Company, which uses these accounts. In order to create a chart of accounts, you must first classify each account. For each account, select the type of account and the proper classification. Okay. So hopefully this comes pretty easy for you, especially after chapter 3 and journalizing all those transactions. So we have an accounts payable. So it's money that has to be paid out. It's money that's owed. So Isabella owes to Supply Mart. So that's a liability. Remember, anything that's owed is a liability. Accounts receivable. That's money that needs to be received by the business. So money that Isabel needs to receive for some type of sale. So an accounts receivable, if an accounts payable is a liability, an accounts payable or accounts receivable is going to be an asset. So as a reminder, one of the reasons why that is classified as an asset, because even if L doesn't pay the money that they owe to Isabel, as a business, Isabel can sell off those accounts receivables to a debt collection agency and get something for them. Not nearly what is actually owed, but can get something for them. So there is some value there. And then after that, it's up to the collection agency to see what they can get. So then we have accounts payable. Once again, that liability. Another accounts receivable, another asset. Miscellaneous expense. Well, we've got some extra classifications down here for that one. So that's an expense. Insurance expense. So pretty obvious. Goes under expense. Prepaid insurance. So prepaid insurance is an asset because if it gets canceled, whatever the balance is refunded back. So that's something of value. The drawing account. That's when Isabel or the business owner takes money out of the business for personal use. So that counts against owner's equity. We have cash. Something of value that the business owns. So that's an asset. Sales. Sales is revenue. Money that comes into the business from the sale of products or services is a revenue. So click that. We have supplies. Asset. We got supplies expense. Well, that's going to go down here in the expense column. Auto expense. Expense. The capital account for Isabel. Well, that's going to go under owner's equity. Then we have rent expense. So down here under expenses again. So there's part one. So let's go to the next step then. Okay, so now that each account has been classified, assign account numbers to each account. You must assign account numbers so that accounts receivable, accounts payable, and expense accounts are in alphabetical order by last name. If there's names, there's an actual name on the person's name on the account. Use 3-digit account numbers and number the accounts within division by tens. Okay, so there's a little bit more to this than what was stated in the directions. If you did the study guides first, then you might remember this from going through the chapter, reading the study, filling out the study guides, that the assets are going to be in order of liquidity, meaning the easiest path to getting cash in hand is going to be listed first, to the hardest way to get cash in hand is going to be listed last. So there's the first part. And then the reason why these are going to be by tens is that way it leaves extra room between each account to add new accounts as needed. So they can be put into the proper order that they need to be put in for record keeping. So our first section, assets. So the easiest way to get cash first is to have cash. So we're going to list that one first. So it's going to be account 110. Then we get into step 3, all these will be reordered. So cash is the easiest way to get cash first. So then next up, on paper anyways, the easiest way to get cash next is through these accounts receivable accounts. Remember, these are people or businesses that owe money. So those are going to be listed next. And these are going to be listed in alphabetical order. And since it's a person's name, we're going to use the last name to alphabetize these. So we've got accounts receivable for L North and accounts receivable for Greg Perez. So we'll go with N comes before V. We're going to leave a gap of 10. So we'll see what our choices are, but it needs to be 120. So there's 120 down there. So then our next one in order for accounts receivable is going to be 130. So there's that one. So now we've got yet another quandary, because now I've got a kind of a contradiction to what I've told you about easiest way of liquidity. In general, the easiest way to get money back is to cancel your insurance. But that's the last thing you want to do. If you cancel your insurance, anything goes wrong, then that creates a whole much bigger problem. So canceling insurance is the last resort. So that's going to be the last thing to do. So we're going to go with supplies next. The business would sell off some supplies. If there was an overabundance of supplies, or if the business was going out of business, try to sell the supplies before canceling insurance. Because if somebody gets hurt on the property, then there's more liability issues. So canceling insurance is last. So supplies is going to be next. So we've got 130. So supplies is going to be 140. And then prepaid insurance last, 150. Okay, so that gets us to liabilities. So we've got Supply Mart and Anoka Supplies. So now we've got, up here we were dealing with last names of people. Now for liabilities, we've got names of companies. So in this case, we're going to go by the company's name, first name. So A comes before Supply Mart, so it's going to be 210. And Supply Mart's going to be 220. Then we get to owner's equity, C before D, so this is going to be 310 for owner's capital, and 320 for the drawing account. That gets us over to sales. Sales, we're going to start at 410. And that gets us to expenses. We got 5 choices here. So alphabetical order for expenses. So looking through the list, A for automobile. So that's going to be first, 510. Then we've got MI, SR, so R before S, I. So insurance is going to be next. So insurance is going to be 520. Then it gets us down to miscellaneous. M before R, so 530 for miscellaneous. And 540 for rent expense, and then 550 for supplies. Okay, so let's go on to the next step now. Step 3. So notice these have all been reshuffled around and placed in proper ordering. So, and then this part, we're going to add 2 new accounts, and then we're going to open an account on a ledger page. So it says Miss Seville had been classifying postage as miscellaneous expense, but has found that the amount paid each month for postage has become a major expense and has decided to use a separate account called postage expense. Also, a new account, utilities expense, is to be added to the chart of accounts. So what account number should be assigned to postage expense? So remember, these have to be in alphabetical order, so we look at our chart, see where that P is going to fit in for postage expense. So P comes after the M. There's nothing else between M and rent. So now you can see why there's that gap of 10, so that leaves us room to add postage in here. So what we're going to do is put that right in the middle. So it still leaves room between postage and miscellaneous, and then between postage and rent. So this is going to be 535. So you can see that'll fit right in between there. And then utilities. What number should be assigned utilities? So you can see utilities is going to be at the end. So nothing else to deal with there. So we're just going to have a straight up gap of 10. So it's going to be 560. Okay, so now it gets us to the last chart. A blank general ledger account is shown here with locations identified by numbers, the 1 and the 2. Use the numbers to answer the questions to open the cash account. So basically, we're starting a ledger page for cash. So the ledger page keeps track of all the cash transactions. Each account will get a ledger page, and then all the transactions specifically for that account will be listed on its own ledger page. But for this one, we're doing cash. So in spot number 1, since this is for cash, we're just going to put in cash. And what value is entered in the location for cash? Look up here our chart of accounts. Cash is going to be 110. And that is the 4-1 work together.